Hey, Dan Passarelli here. Happy Friday. It's the weekend. How about that? That is pretty darn exciting, isn't it? Well, it has been an interesting week. It was looking like we were going to be closing lower on the week in the S&P 500, as you can see here. But instead, the market was up 1.5%. SPY closing at 645 spot 31. Why? Well, it's warming up. There's a lot of things that have been warming up. First of all, Fed Chair Powell seems to be, from his speech in Jackson Hole, warming up to the idea of cutting interest rates more aggressively than otherwise seemed before this speech. Canada warming up to maybe making a deal with the U.S. They decided today to not implement at least some of their retaliatory tariffs. Intel warming up to giving the U.S. government 10% of the company for an investment of 10%. Warming up to that idea, the CEO said that he would be interested in that. Also, psychedelics, believe it or not. It sounds like at least one of the GOP senators is warming up to the idea that maybe psychedelic use among veterans will expand during Trump's term. We'll see. You know what else is warming up? Inflation. Yes, we recently learned that, didn't we? So inflation is definitely warmer than we would like it to be. And let's talk about those implications. So first of all, the reason the market would rise today is because of the expectations for interest rate cuts, because people just look at the market as an alternative to fixed interest rates. And when you can get less on fixed interest rate products, the market becomes a more attractive alternative, even though it's riskier. So that's the only regard that it benefits the market. But what inflation tends to do is make the input costs, I should say, higher for companies. And that does end up usually, for most companies, affecting the margins, meaning lower earnings, which ultimately leads to lower prices. So even though we get a jump because of the expectation for interest rates, cutting interest rates in a high inflation environment, along with the tariffs are likely to be a one-time inflationary situation, but sticky inflation that just doesn't go down, that's perpetual. How do we fight this? Well, we fight it by investing in things that benefit from inflation. One of them is metals. It's not too often you see the market being up pretty good and gold being up pretty good and silver being up pretty good. Market up 1.5%, gold up 1%, silver up over 2%. Real estate. Real estate is a hard asset. It's something that is there, and when prices go up, input prices, the price that it costs to buy a house, and that makes houses more expensive to build, and so therefore they get more expensive to sell. Not to mention, when wage inflation goes up, people have more money to pay for rent, and those landlords are going to get their share of that because, well, they need to raise it because their costs are higher. Also, commodities. Investing in things like oil. These are things you have to do with futures and such, but, oil and lumber and that kind of thing. Another one, TIPS. These are Treasury inflation protected securities, where these Treasury bonds and notes and such, the principal and interest payments adjust with inflation. And these are some things to keep on your radar. These are some things to not necessarily jump on right now, but not to be the last person jumping on them either, because they're likely to be jumped on. That being said, have a great rest of your weekend. Trade smart. This is Dan Passarelli, and I'll see you next week.